As a well-known proponent of disruptive technologies, Cathie Wood, CEO of ARK Invest, has expressed her opinion that Ford, GM, and other legacy automakers are facing an existential threat that could force them into bankruptcy and send Tesla stock prices to unimaginable heights for those of us who believe in real life. According to the investment manager, Tony Stark-Galan agreed that if you enjoy this kind of film, hit the like and subscribe buttons. Managing for GM and Ford will be very difficult over the next 5 to 10 years, according to Cathie Wood's statement to the Barron's. Renowned money manager Cathie Wood, who is highly recognized in the market and bullish on Tesla, has issued an unexpected forecast for GM and Ford. She predicts that it will be very difficult for these businesses to continue in their current form over the next 5 to 10 years. In Cathie's opinion, these businesses will either merge with another business or completely fail. Wood, on the other hand, thinks that if Tesla is successful in developing autonomous vehicles, it may be able to take a sizable portion of the auto market over the next 5 years, and that its stock price will reach $1,000 by 2025. However, Morningstar analyst David Winston has a bright outlook for General Motors and believes that its stock is worth $68. He wrote last month that General Motors cars are the greatest in quality and design in decades. A competitive lineup across all categories and a far lower cost base indicate to us that GM is beginning to realize the scale to match its size. In an unusual move, ARK and Medicine Management, led by famous stock picker Cathie Wood, bought 158,000 shares from GM on behalf of its Robotics and Autonomous Technologies Fund, ARK-Q. She has previously been critical of legacy automakers, so there is a substantial change in her position. The report that displayed the firm's most recent trades included a detailed description of the transaction. Earlier this month, in a special interview with Yahoo Finance, the CEO and creator of ARK Invest disclosed that her team recently met with the CEO of General Motors, Mary Barra, to talk about the company's plans for electric vehicles. She added that ARK was thinking about making an investment in GM and maintaining and keep an open mind regarding it. While speaking with Yahoo Finance's Julie Hyman, Cathie would stress the need of keeping an open mind and celebrating accomplishments. She clarified that ARK Invest is still learning about General Motors and is considering making an investment in the business. In January, Wood acknowledged her admiration for Mary Barra's approach to reviving GM and concentrating on cruise automation during the Ford and GM stock price spike following their disclosure of their electric vehicle plans. However, in an earlier interview with Barron's, disparaged their rallies and assert that the percentage of electric cars in their sales would be insufficient. According to Cathie Wood, Wood even projected that GM and Ford might file for bankruptcy because she didn't think they had the right genetic makeup to be successful in the electric vehicle market. In a recent interview with Yahoo Finance Live, a Tesla bull claims that the electric vehicle maker's recent price reductions won't hurt its brand, but rather present a challenge for other manufacturers looking to catch up. According to the founder of ARK Investment, traditional manufacturers will struggle to match Tesla's price reductions because to its cost leadership and battery technology. According to Cathie Wood, Tesla remains the largest holding in the Wood's ARK Innovation ETF RK. In a Yahoo Finance Live interview, Wood stated that the price cuts are the result of Tesla's captured leadership in battery technology and that automakers need to transition to this. While she believes that the brand will not be harmed by the recent price cuts, it may present a challenge for other automakers looking to close the gap battery technology to stay profitable despite Tesla's price reductions. Tesla's gross margins will continue to increase as it cuts prices due to economies of scale. Skills can help Tesla in several ways. First, as Tesla produces more electric vehicles, it can spread its fixed costs, such as research and development, marketing, and overhead expenses over a larger number of units, reducing its per-unit cost. This means that as the company increases its production volume, it becomes more cost-efficient and its profit margins improve. Second, larger volumes of production can also enable Tesla to negotiate better deals with suppliers of raw materials, parts, and components, leading to lower costs per unit. Third, economies of scale can help Tesla gain a competitive advantage in the market. As the company produces more electric vehicles, it can reduce its prices to attract more customers, which can help but gain market share. Additionally, as Tesla increases its production volume, it can invest more in research and development to improve its products and develop new technologies. We can further strengthen its competitive position. Compare this to GM or Ford, since these producers can only produce a certain quantity of electric vehicles and cannot benefit from economies of scale. Overall economy as a talent for Cathie Wood can assist Tesla in cutting expenses, improving productivity, and gaining a competitive edge. Benefit that may eventually result in increased revenue and steady expansion. Tesla recently lowered the cost of its Model 3 base model. In the Model 3 performance variation was discounted by $3,000 and $9,000, respectively, while the Model Y long range had a price reduction of $13,000 to $52,990, and the performance model was discounted to $56,990. Ford responded by lowering prices to more effectively compete with Tesla, while GM CFO Paul Jacobson has no intentions to lower EVs prices. The cost of Tesla, as Elon Musk stated in the company's most recent earnings conference, cost reductions have raised demand and gained market share. However, some Wall Street experts do not share this optimistic view of Tesla, believing that the price. John Murphy, an analyst at Bank of America, believes that making cuts could have a long-term negative influence on the company's reputation, as well as severely impact profit emergence. According to Elon Musk's claim on the fourth quarter earnings call that his demand is 2 times more than supply, it would be foolish to lower prices, since doing so would just reduce profitability and prevent you from gaining any additional incremental volume in the near future. Cathie Wood during the Morningstar Investing Conference on Wednesday. Tessa Bull, the CEO of ARK Invest, revealed the price at which her investment firm will sell its shares of the electric manufacturer. According to Woods, ARK will begin selling its shares if the price of Tesla stock hits $1,000 within the next year. This price target was established by ARK in March and represents the company's base case for the price of Tesla stock in 2025. The price target was established based on a Monte Carlo analysis. ARK's prediction that Tesla's product line will grow in size reinforced the price target. The governor of Nuevo León, where Tesla recently announced the construction of a new gigafactory, stated that the company may begin producing its first cars in Mexico the following year. The electric vehicle manufacturer is awaiting the issuance of final permits for the construction of a factory near the U.S.-Mexico border. This indicates that the company's manufacturing capabilities will increase as it builds more gigafactories, according to Governor Samuel Garcia. Finally, Wood believes that legacy automakers are facing significant regulatory challenges. Tesla, Rivian, and Lucid Motors are all focused on building electric vehicles, EVs, and they have been able to attract significant investment. In contrast, traditional car manufacturers have been struggling to attract investors, and as a result, their market share is shrinking. Governments everywhere are beginning to impose increasingly stringent pollution laws, which will make it harder for automakers to keep making gas-powered vehicles concurrently. Since legacy automakers have dominated the auto industry for more than a century, Cathie would believe they are facing an existential threat unless they can quickly adapt to new technologies and changing regulations. Many of them are likely to go bankrupt, leaving Tesla open field for a $1,000 price. Regulators are also pushing for greater investment in EVs, which will further squeeze legacy automakers that have been slow to make the transition overall. Please hit the like and subscribe buttons if you enjoyed this video. I'll see you in the future one.